All right, let's dive right in. Today, we're unpacking the latest quarterly numbers from TSMC. Now, you might not think about them every single day, but they are, without a doubt, one of the most important companies on the entire planet. I mean, they're the world's top chip maker, so their performance is basically a health check for the whole tech industry. So, what's the story their latest results are telling us? Let's get into it.
Okay, but before we get into any of the details, we've got to get the important stuff out of the way first. Just a quick heads up, this explainer is purely for informational purposes. It is absolutely not financial or investment advice. We're simply breaking down the public information that TSMC itself released.
All right, now that we've covered that, let's get to the good stuff. We're going to kick things off with the headline numbers. You know, the ones that really got everyone talking.
So the first number you really need to see is this one right here. A massive 60.7% jump. I mean, wow. But a jump in what exactly? Let's put that number into perspective. So that 60.7%, that's the year-over-year growth in their net income. And if you look here, you can see this was no fluke. Net revenue was up by over 38%. And earnings per share? Yep, it shot up right alongside the income. I mean, whichever way you slice it, these are just incredible blockbuster results.
Okay, so where is all this incredible growth coming from? To really get it, we need to look under the hood and see what's actually bringing in all the cash. You know, this is always the big question with any company report, right? What's the engine driving this kind of performance? Well, for TSMC, it really all boils down to two things: how advanced their technology is and who's buying it.
And here is a huge part of the answer. Take a look at this. The tiniest, most powerful chips, we're talking 3 nanometer and 5 nanometer, they make up a whopping 60% of all revenue combined. And just to be clear, the smaller that nanometer number, the more powerful and efficient the chip is. And right now, the demand for this cutting-edge tech, it's just off the charts.
So, who's buying all these advanced chips? Well, here you go. High-performance computing, or HPC, is the giant here, making up 60% of revenue. And what's in that HPC bucket? You guessed it, the absolute powerhouse chips needed for AI and data centers. Now, smartphones are still a really big piece of the pie for sure, but this chart tells a very, very clear story. The AI gold rush is what's fueling this phenomenal growth for TSMC.
So the revenue story is just amazing. But what about the company's overall financial health? You know, is it solid? To figure that out, we got to take a look at the books. Okay, get a load of this number. That's almost 200 billion new Taiwan dollars. That's TSMC's free cash flow in a single quarter. It's a really important number for figuring out a company's financial health, but what does it, actually mean? Yeah, so for the rest of us who aren't accountants, let's break it down. Think of free cash flow like your personal take-home pay after you've paid all your bills and put some money aside. It's the cash a company has left over after paying for everything it needs to run and expand its operations. Having a lot of it is a huge sign of financial strength and gives them a ton of flexibility. And speaking of financial strength, just look at this. That's 2.63 trillion new Taiwan dollars. That's the amount of cash in investments they just have sitting on the balance sheet. It is an absolutely massive war chest, and having that kind of money gives them the power to outspend pretty much anyone on R&D and building those next-gen chip factories.
Okay, so that's the story of Q2, an amazing quarter. But what's next? What does TSMC think is coming down the pipe? For that, we can look straight to their own official forecast.
And it looks like they're signaling that this boom is far from over. They're actually guiding for Q3 revenue to be as high as 33 billion US dollars. But what's maybe even more impressive are the profit margins they're expecting. A gross margin of almost 58%? That tells you they have some serious pricing power. And it's a huge signal that they believe the crazy high demand for their best chips is going to keep on going. And if we zoom out and look at the whole year, they're forecasting revenue growth of around 30%. Now, you got to remember, for a company this big, this established, that is just an insane, blistering pace of growth. And really, that brings us to the final thought here. The trends are just undeniable, right? AI, high-performance computing, all this stuff is accelerating, not slowing down, which leaves us with a really interesting question to chew on. As our world gets more and more hooked on these incredibly powerful, tiny pieces of silicon, what are these numbers going to look like the next time we do this? What's the next chapter in this story?